Housing foreclosure filings are up 132% from last year. Today we're going to check out this data and see how is this going to affect the housing market. Is a crash near? My name is Tommy Jordan. I'm a real estate agent and a mortgage broker here in Southern California. Alright, here's the article from MarketWatch. Now there's three key stats I want us to check out. First is that the number of active foreclosures, so this is when the foreclosure process has begun on a seriously delinquent loan but is yet to be completed and liquidated. So this edged up by more than 7,000 in March, the first year-over-year increase in almost 10 years. So there hasn't been an increase like this in 10 years. That's pretty big news within itself. Secondly, more than 78,000 US properties had a foreclosure filing during the first quarter of 2022, which is up 39% from the previous quarter and up 132% a year ago. Wow. Third, serious mortgage delinquencies. Those 90 or more days past due are 70% higher than they were pre-pandemic. Active foreclosures, the highest in 10 years. Secondly, foreclosure filings up 39% from previous quarter. And lastly, serious mortgage delinquencies are 70% higher. Those are three big numbers. And this is what this article says. It says it's not as grim as it might look, but we're going to take a look at the very end of this video why I think it is actually more grim than this article is putting on. Though active foreclosures are up on a year-over-year basis, the number of loans in active foreclosure is way below historic norms. No big deal. All's good, right? On average, prior to the pandemic, the country saw about 30 to 40,000 foreclosure starts per month. The big but here in blue, foreclosure moratoriums that were put in place as a part of the CARES Act in response to COVID-19 drove all of that normal activity to a halt. And this is what I want us to investigate more after this article. Continued low foreclosure starts are because the vast majority of folks have taken advantage of forbearances, have come out of such plans and returned to performing on their mortgages. And those who remain in forbearance may still have protection against foreclosure until they reach the maximum allowable forbearance period. But how long does forbearance actually last? Typically 3 to 6 months, with most options being able to extend up to 12 months. And then you have Fannie Mae or Freddie Mac. You could extend up to 18 months in total. And then HUD, FHA, USDA, VA, government loans, up to 18 months of total forbearance as well. So the numbers we're seeing are actually skewed a little bit because of the CARES Act and because there's still a lot of people who are delinquent. They're behind on their mortgage payments, but they're doing the forbearance process right now with the banks. Foreclosure activity increased significantly in the first quarter of 2022. This doesn't indicate a sudden weakness in the housing market or the U.S. economy. Mortgage servicers are essentially catching up on processing foreclosures on loans that were already in default or more than 120 days delinquent prior to the pandemic. Many of those loans are fairly old, issued prior to 2009. And we're not expecting to see a huge wave of foreclosure activity anytime soon. Even with a dramatic increase in first quarter activity, we're still running about 50% of normal level. They're saying that mortgage servicers are essentially catching up, right? That they're just behind on processing foreclosures. Then why did we see in the beginning of this article for active foreclosures the first increase year over year in the last 10 years? Someone told me recently that people who like truth and unbiased information actually smash the like button more than people who don't like truth. Thanks. Let's finish up this article and then get to the juice, get to the meat, get to the burger, okay? Black Knight reports that 30-day delinquencies, borrowers who are just a single payment past due, plunged 20%. Okay, so it's lowering. The reason for this decline, a combination of rising employment, student loan deferrals, the more deferrals there, I think we're getting like, some weird data, strong post-forbearance performance, and millions of refinances has helped put downward pressure on delinquency rates. So I'll tell you what, the refinances have definitely helped people lower their payments. There's a lot of data we're not getting from this article, so I want to see how many loans are still in forbearance, and out of those people in forbearance, how many of them are ending up in foreclosure or missed payments, or how many have just kept extending the forbearance process, giving us the skewed data, in my opinion. So here we go. Let's look at this. Loans in forbearance by investor type, okay? Let's look at just the total. That's the overall market of loans. We see earlier this year, right, in 2020, it was about 8% loans in forbearance. And it makes sense, the pandemic, people weren't able to work, not able to pay their mortgage payments. So, it shot up. People needed help from the government. They weren't even allowed to go to work in most cases. And then you see, the last year or so, it's really dropped to the rate we're at now. So not a lot of loans left in forbearance. How about those remaining forbearance loans? 29.7% of total loans in forbearance are in the initial forbearance plan stage, while 57% are in forbearance extension. So they're not able to make their payments, so they're extending it. That's over half have extended it. Excuse me, too much coffee. The remaining 13% are forbearance reentries, including reentries with extension. Wow, so over 70% of those people still in forbearance, right? They've extended it, or they've extended it again with reentries. So 29% resulted in a loan deferral partial claim. So 29% did a deferral or partial claim. This is from the CFPB, which is like Consumer Financial Protection Bureau. It's like the FBI for mortgage industry, okay? How it works, these options will either move your missed payments to the end of your loan or put them into a subordinate lien repayable only when you refinance, sell, or terminate your mortgage. Well, that's cool. So it's like another loan on your house, another lien, or you move the missed payments to the end of your loan, almost like a balloon payment. So they're giving you even longer, deferring those payments. So that's 29% of the people. Almost 19% represented borrowers who continue to make their monthly payments during the forbearance period. Well, that's great. 17% represented borrowers who do not make all their monthly payments and exited forbearance without a loss mitigation plan in place yet. That's a lot of people, guys. We're talking about 500,000 homeowners, 17%. That's what, about 80,000 people did not make the monthly payments and exited it without loss mitigation in place. 15% resulted in loan modification or trial loan modifications. 11% resulted in reinstatements, which past due payments are paid back when exiting forbearance. Okay. 6% resulted in loans paid off through either refinance or selling the home. Well, that's great. And the remaining 1.3 resulted in repayment plans, short sales, deed in lieu, or basically foreclosures. Foreclosures, they're saying like 1%. I don't think we're seeing the true effects on the housing market with the forbearance programs going on and with all these people requesting extensions. The Federal Reserve printed trillions of dollars in the last few years during COVID. We have record high inflation, interest rates at an all-time high, housing unaffordability. I think there's so many factors that haven't hit the housing market yet. Housing's always sort of a lagging indicator next to a thing like stocks, which stocks just react very quickly. In the next 12 to 24 months, I think we're going to see the true effects on the housing market from all these different variables I described. As always, to stay up to date on the housing market, you're going to need to hit subscribe. A lot of you watch without subscribing. Please help me grow the channel. If you're watching, come on, let's go, baby. Thank you so much. Sorry, I think I spit there. I'll see you in the next video.